Global liquidity is going parabolic, the Fed is about to cut rates, and Bitcoin is about to have a parabolic run. My 6 years of experience is telling me that you don't want to miss this. So the first thing that we'll break down is the price action of Bitcoin. Right now we're looking at a daily time frame, and what you might be able to notice is the power of 3 or AMD that's currently playing out. Just to make sure everybody's on the same page, let me quickly break down exactly what a power of 3 actually is. It is a 3-phase concept, and the first phase is what we call an accumulation, which is a fancier word for a consolidation. Now, the whole purpose of this consolidation is that it engineers buy-side liquidity as well as sell-side liquidity. When the market then runs down and sweeps the low, well then phase 2 begins, and that is exactly what we call manipulation. So what you're seeing right here is the manipulation phase, and the reason why it's called the manipulation phase is because price is essentially manipulating the vast majority of retail investors. You see, most investors are taught to short rectangular breakouts, which means when we have a consolidation and price runs down and sweeps the low, well then they are essentially shorting the market as a rectangular breakout. Now, because you've seen these videos, you now know that that right there is likely a manipulation phase, and that will send us straight into the distribution phase. Now, the distribution phase, as you can see in this image down here, is the phase that sends price parabolic. It is also the phase where we want to look for our entry. Now, let's say that Bitcoin ran up and swept the highs instead of the lows. Well, then we can anticipate manipulation to the upside and the distribution phase to send us way lower. So that right there is the major reason for me longing Bitcoin. Now again, with this power of 3, it is at least going to send Bitcoin to the all-time highs of about 112,000. But throughout history, the distribution side of a power of 3 or an AMD model has sent price way higher than its all-time high, and we can anticipate the exact same thing to happen. But how do we actually know if there's a bunch of stop losses resting at the all-time high? Well, luckily, we have access to information such as liquidation heat maps. So this right here is a Binance Bitcoin liquidation heat map, and it will essentially tell you where liquidity is resting within the market. As you can see, the vast majority of the liquidity inside the Bitcoin market is laying at right around 111,000, which again is the all-time high. So that right there is proof that there are hundreds of millions of dollars worth of stop losses at the all-time high. And again, if you know anything about trading, well then you know that the market is attracted to two things: liquidity and inefficiency. Now, another thing here on Bitcoin that further proves that the order flow is indeed bullish is the way that we're holding this larger fair value gap. So if you don't know how to identify bullish versus bearish sentiment, look at how price is respecting the fair value gaps. So as you can see, in April, we hit a daily imbalance that sent Bitcoin way higher. In May, we hit another daily imbalance that sent Bitcoin to an all-time high of 112,000. We then came down, retested the imbalance, went higher, came down, retested the imbalance, and then went higher. So the first 2 times that the market tested this imbalance, well then it left a lot of inefficiency within that imbalance. And that right there is the reason why it had to come down a 3rd time, because it wanted to fill the entire inefficiency. And again, because of that, there is absolutely no reason for price to come down here again. Now, because we've been holding these bullish imbalances quite well, we can only anticipate that if price comes down and retests this fair value gap right here, it is going to hold again. But this right here is only technical analysis. We want to know whether there's money flowing into the market or not, because at the end of the day, money controls the market. And that is exactly why we're now going to have a look at the global liquidity. So the yellow line that you see here is the global M2 money supply. Now, this right here is an 80-day offset. That essentially means that this is a prediction of the global liquidity over the next 80 days. Now, you might be wondering, why is that important? Why should I pay attention to global liquidity? Well, the reason for that is because it is clearly very, very correlated to Bitcoin itself. Now, the whole trick here is that there's a delay between money flowing into the economies and then that money flowing into Bitcoin. And it is exactly that delay that we want to take advantage of. So, because the market expects global liquidity to go very, very parabolic over the next coming months, we can expect Bitcoin to do the exact same thing, because that is exactly what it has done throughout history. And it also makes sense, right? More money flowing into the economy obviously means that there's more money available of flowing into the crypto market. And at the end of the day, crypto can be broken down into a really simple manner. The more money you have in an economy, the more money is capable of flowing into crypto. So if you can predict when people have more money, you can essentially predict the direction of crypto. This cycle is very different. Normally, we would have had an altcoin season by now. You see, what usually happens is that money flows into Bitcoin, then that money flows into Ethereum, and then that Ethereum money flows into altcoin and pumps up that market. Only this time around, the Bitcoin dominance has clearly been in control for way longer than it usually does. Now, when the Bitcoin dominance goes up, it essentially tells us that Bitcoin is in control. When it goes down, it tells us that altcoins are in control. So when you see massive dips like this in the Bitcoin dominance, well, then that is exactly when we had an altcoin season. 2021 is obviously a great example of this, because again, when it goes lower, well, then that tells us that altcoins are in control. Now, this time, the Bitcoin dominance does not seem to be stopping, but altcoins are still thriving, which they normally wouldn't. A lot of people are confused as to why that is. Now, one of the biggest reasons for that is because Bitcoin ETFs were approved January 10th of 2024. This is the first time that we've seen this, and that essentially pulls forward institutional demand before the original altcoin season. That is just meant to change that original cycle. Now, not only that, but in 2022, we also saw Russia invading Ukraine. I mean, we have just seen endless of geopolitical tensions, which again is just bound to change the market conditions. Now, if you're wondering where I'm placing the trades that I do, I'm using toobit. Toobit is a great exchange, some of the lowest fees in the industry, which means I get to keep the vast majority of my profit. And right now I can offer you 50 USDT for free by simply signing up with the link below. So again, if your exchange is making you pay high fees, or maybe you just want to grab some free cash, well then go ahead and check out toobit down below. Now, what is the lowest point in price I expect Bitcoin to go? Well, I actually don't think we'll ever see Bitcoin below 100,000 again. I think the lowest we will go this cycle is equilibrium of the current range, looking at a 4-hour time frame. You see, if you have identified a bullish market, the pullbacks are going to end around equilibrium and no further than that. Now, equilibrium as it stands right now is about 104,000, and I don't expect Bitcoin to go any further below that. As traders, we want to buy in a discount and sell in a premium. So if Bitcoin decides to drop down below equilibrium and hit discount, well, then I'm essentially looking to long the market from discount and all the way up into a premium. So let's say Bitcoin decides to drop below equilibrium. I'm not going to be worried because I'm going to look at that as a discount. What we've looked at here has primarily been technical analysis. Let's take a look at some actual macroeconomic data. So a recent article here states that Trump believes interest rates should be lowered to about 1%. Now, I don't think a lot of you understand exactly what that means because currently the interest rates are sitting at about 4.5%. This right here is a 10-year chart, and we are just near an all-time high in terms of interest rates. So Trump wants these to get lowered, but he wants it all the way down to about a 1% evaluation, which we haven't seen since 2022. This right here will make borrowing money become extremely cheap. And as I said earlier in this video, crypto is about figuring out when people have the most money. When borrowing becomes cheap, well then people will naturally borrow more money, which means they will have more money that is now capable of flowing into the crypto market. So if these rate cuts do go through and interest rates are going to drop to about 1%, well, then we're going to see a massive rally in crypto. Now, you might sit there and say, Powell has publicly said that he doesn't want to cut rates. So that's out of the question. Yeah, that is true. He has said that because he believes that the Trump tariffs will drive up inflation on their own. Now, what's interesting here is that Trump has recently said Powell should resign immediately. There's also rumors going around that Powell will be fired within the next 2 weeks. And if this goes through, well, then I do actually think that we're going to see aggressive rate cuts that is eventually going to drive the interest rates down toward 1%. Now, another concern that pops up in people's head is, well, that will also increase inflation a lot, and then inflation will just become a problem. That is very true, although the inflation as it sits right now is only 2.4%, which means that we could see quite a large raise in inflation without that necessarily having that big of an impact. The last time we saw the inflation this low was in September of 2024, and that is exactly when the Fed decided to aggressively cut interest rates. So let's take a look at what happened to the price of Bitcoin the last time they decided to cut rates in September of 2024. Bitcoin went on a parabolic run. In fact, it increased by 76% right after the Fed decided to aggressively cut interest rates. And again, the last time they did that was in September when the inflation was sitting at 2.4%, and we're seeing the inflation sitting at the exact same number here in May of 2025. So there are just endless reasons for Bitcoin going absolutely parabolic. The rate cuts that are about to come in are going to be extremely aggressive, which again means that people are going to have way more money, and that money is bound to flow right into Bitcoin. The global liquidity is going parabolic and the technical analysis is looking great. So all in all the data that we've been looking at, all the articles and the macroeconomic data all points towards the same thing. None of this would be of any significance if they did not point towards the same thing, but they do. Everything points towards a Bitcoin rally, so position yourself accordingly.